Hello traders, welcome to another daily analysis. Today is November 15th. Right now it's just slowly past 7:30 Eastern Standard Time. So let's get into it. So the last night Asian session we have the Australian Monetary Policy minute. The meeting released, and then basically the most important thing is that the RBA has signaled there is no further easing required. So right now the Australian dollar is basically, the economy is well supported at the moment, and they're not looking to ease or cut interest rate further. So that's a good news for Australian dollar. Moreover, is that it's saying that the commodity price has picked up well to support the economy. But of course, they're still cautious that the higher Australian dollar exchange rate could jeopardize things. Now, interesting to mention that today I read the news that China is trying to hammer down the commodity price. What happened is that the commodity price is indeed picking up right now. So there's now a lot of speculators creating more bubbles. So the price was high already, and now people like to join this uptrend, so they're making the price even higher by speculating the commodity, and that's of course are all very good news for Australia. So we are actually very bullish about Australian dollar at this moment. You have a very high commodity price. The Chinese economy is pretty much the only growing economy picking up very fast among the major nations, and the commodity price has been speculative, hugely by a speculator. So all this good news just signal that Australian dollar will be very well supported. Now, the only risk is that if the RBA, the central bank, sometimes decide to intervene the FX market, that will be the only risk. Other than that, I'm really looking forward for a bullish Australian dollar at this moment. Of course, another risk is that if the sentiment has shifted, but unless we have something like US election again, otherwise we are not going to see such a big event to shift Australian dollar sentiment. We started London session today with German preliminary GDP was actually negative than expected in previous. So it's not really a good sign. On top of that, the European nation are really in this chaotic aftermath for, first of all, the Brexit, second of all, the US Donald Trump elected. So it's already unstable situation. Now the preliminary GDP from Germany, of course, add on more negativity. But mind you, it's just a small indicator. It's just a small piece of news. It's not really what's causing the euro dollar drop now. There is really not about the single country's data. It's really the overall global sentiment. Now, recent events today, we actually trade the British pound CPI data. It was actually negative surprise, so we actually jump in. But I'm going to explain more. We actually got out at break even plus few pips. And the reason is that we didn't have much movement. Now, the reason is because the CPI year-to-year and month-to-month came out as negative surprise. So supposedly that would be very negative for British pound. But the PPI data actually came out as positive surprise. So for those of you who understand the economic side of it, then you don't, I'm sure you understand it. But for those of you who don't, let me explain. The CPI is a consumer price index. So they measure the consumer price, like the things you buy in the supermarket and daily lives. Now, the price was actually declined. So when the price decline, that means that the goods become cheaper. Of course, that's bad for inflation. But the PPI data actually become a positive surprise. So why is that? Well, it's because the factory order have become very expensive for producer. And the reason is because the British pound has been largely sold off since the Brexit. So ever since the June Brexit, we see that the pound has lost more than 10% of its value. What happened now when your currency becomes so cheap and you're buying goods from outside? And remember that Britain is a very small country. There's a lot of import. They need to material to produce goods. So a lot of goods become very expensive because the British pound become very cheap. Now, the goods becomes very expensive, so of course the producer price index, the product itself become very expensive to make because now the material become very expensive. Now, so that's why you see a PPI data came out actually of a largely positive surprise, a large jump. What's that gonna happen is that the producer are going to transfer that price into the consumer. That means if I'm a producer, I spend $5. I used to spend $5 to make a soap, okay, whatever it is, to make a computer. Now I have to spend $10. So guess what? I'm going to raise my price because otherwise I'm going to be out of business. So although the CPI data is negative today, it's a decline. It's inevitable for economic formula. It's inevitably that it has to go up. Now, if it's go up, then what's going to happen is that this CPI data goes up is not a good sign. Generally speaking, when you see inflation, you have to know if this is a real exchange rate inflation or is this economic inflation. What does that mean is that inflation comes down to two things. When the economy is expansion, then you have a lot of buying power, you have a lot of demand, then the price have to go up. Nevertheless, then that's a good inflation. The other kind of inflation is this kind that the Britain has currently. Is when the currency rate drop significantly, then everything become, relatively speaking, more expensive. And that's what happened to Britain right now. So this inflation is not good. So what happened to central bank right now is that really they are in this position. It's really a hard choice right now. If they raise the interest rate up, they are going to reduce the inflation that comes down from a negative exchange rate. But they are going to hurt the economy further because if you raise the interest rate, the cost of borrowing money become more expensive. If, however, they cut the interest rate further, they are going to stimulate the economy, makes the price cheaper for people to borrow, for business to lend, to borrow more to do business. But that's also going to hurt the producer further. That's also going to hurt the things further. So right now they are really in this position. And now what can we do as a trader? It's really what's really deciding the future of British pound is really depend on the Article 50. It's really depend on how are they going to play out the Brexit exit. Now today, another piece of news leaked out, which is not confirmed whether it's a rumor or not, but basically saying that the British government did not really have a Brexit exit plan. So that means that people are yelling at the Brexit exit plan for the referendum, and now it becomes truth, but now nobody knows what to do next. Now, of course, that's going to create a lot of political unstableness. And as I mentioned, as an investor, the last thing you want is a nation's political unstableness. So right now, I am still bearish toward British pound because of that. Now, mind you that the interest rate might not be cut further because, again, the exchange rate has already dropped significantly. But that does not mean the economy is picking up. So right now, it's really we have to see how the political play out in Britain. How are they negotiate that Brexit exit with Germany and with other European countries? But if all things are equal, of course, I'm more bearish because of the unstableness. Now, I have one order in right now shorting cable. The reason is because no matter what happened to Britain, even if they find a solution, they will never be as strong as US dollar, which comes down to our next piece of data today is the US core retail sale and retail sale all came out as positive, and one of them is actually positive surprise. So that's, again, is a very good news for US dollar. That's why you see today US dollar continue to go up. Now, why is it very good news? Because right now you have a Donald Trump elected positive sentiment for US dollar. I know it's a negative sentiment for the global economy or for some of the nation, but it's very positive because now Trump has shown that he is going to emphasize on the business, which again, as I mentioned, Republican Party is always a pro-business party. He's mentioned that he's going to remove a lot of banking, financing regulation to make the market more free. And he also mentioned that right now, the Federal Reserve also came out saying that they are have a high possibility to hike the interest rate. So pretty much among all the major nations, US is doing very, very well in terms of financial market. So of course, US is still our number one data. I know everybody is buying US dollar right now, but just to understand that besides the election and all this sentiment, US does have a strong fundamental base, so it is a good currency actually to have. The GDP price from New Zealand dollar is 4.5% today. Was actually, it's lower than last week, but it's not really nothing significant. Right? Still positive. Now, what happened to New Zealand right now is really the earthquake thing. You have to wait for it to cool down first. But just to give you a hint that, and whenever a nation has an earthquake, they will have to spend more money on the infrastructure. That means that they will boost fiscal spending. But you don't want to jump in too quickly because right now they are still cleaning up the mess right now. So wait for the things to die down first. Then they will report exactly how much money estimate they have to spend. And that's the point you can buy New Zealand dollar if everything still is the same. But that's basically a good fundamental driven force for New Zealand dollar, for any country basically, whenever they have to spend money on infrastructure, even it's from a natural disaster. Now, sentimentally, we have a large green day for WTI, and the reason is because another meeting is coming up for OPEC members. They agreed to meet prior to the November 30 meeting to discuss further detail. Now, the market has treated as a positive news because now they decide to meet further. That means they have a higher chance to actually reach an agreement on November 30. Again, anything to do with OPEC, don't hold your breath. Don't hold your breath, right? Because we never know whether they're going to reach agreement or not. But as for now, the market placing a positivity bet into it. For me, currently, that's just a sign for me to not selling Canadian dollar for now. But that's definitely not a sign for me to buy Canadian dollar because, yes, of course, you can buy rumors, sell the fact. But the thing is that I really don't have any confidence really toward this OPEC meeting. But nevertheless, we're going to chart and we'll see if we have a better opportunity in terms of price action. Other than that, equity market also all green day, all up today. Again, a very good sentiment tone. Still strong force coming out from post-US election. And overall market is very good right now. So let's take a look at the chart and we'll talk more about it. So first thing first, take a look at 28 currency pair. So let's first of all take a look at our Aussie Newsy. So currently we are still in this trade. As you can see, we are actually getting our buying momentum has decreased basically. So as I mentioned, don't be surprised to see a little bit drawdown. Basically, we're already in risk-free trade already, so really no hurry for me to do anything. But if you draw a Fibonacci line, you'll see that we have to break this 1.0659 and close above to signal a further upside. And mind you, we are still couldn't close above 200-day exponential moving average. So very much likely we'll see a retrace up to 1.0589. Now, the best case scenario is we stay here, right? I don't want to see drop to touch 50%. Excuse me, because that's just not a good sign. But nevertheless, I'm very bullish toward Australian dollars, so really not looking to do anything at this point. I'm just going to hold it further and see what happens. We're still at the beginning of the week, so see what happens. I have a new trade in cable. I got in at the risk event. So there's different strategy I trade. Of course, sometimes I trade with after the New York close. Sometimes I trade into a risk event. Sometimes I trade at the risk event. When I trade at risk events, there's two types of trade. I either do an intraday trade or I do an intraday trade that I'm going to hold into a daily trade. Now the difference is, of course, is the stop loss point. So this is my intra-daily trade. That means that I enter as a risk event trade, but I had intention to hold it daily. And that's what I'm doing right now. So I got in at this line, 1.2427. Of course, I'm in a small drawdown right now, but nothing much to worry about. My stop loss is way above here, 127.27. So 300 pip stop loss. I'm looking forward for pound for cable to go down. Now, I'm not surprised to see a bit sideline. Like I say, British pound is in a bearish to neutral position, and it's really depend on what happened to the particular situation. The reason I'm shorting pound basically because it's not because I know that pound is gonna drop. It's just because I have a lot of faith toward US dollar right now. So nevertheless, no matter what happened to British pound, I have faith toward US dollar, so that's why I am holding this trade right now. I want to see it close below this trend line to continue downward movement. But nevertheless, for now, really nothing much for me to do besides just holding it. Let's take a look at euro dollar. Again, fundamentally speaking, I'm still very bearish toward euro dollar. As you can see, we have another bearish signal today toward euro versus pound. Now, is this a good signal to enter? It is, but I don't want to sell euro dollar against British pound. The reason is because they both are very bearish on my chart, So I don't have any particular faith toward any of the currency in these two currencies, right? I'm very bearish toward euro dollar. I'm also bearish toward British pound. So I might use this opportunity to short in the intraday, but not necessarily want to hold it. Now take a look at Euro Swiss franc. An update for euro dollar. Euro dollar, again, another very bearish signal for euro dollar. Euro Aussie, it's another bearish signal for Euro Aussie. Again, no surprise. The only thing that reframed EuroCAD another down day because we have an update for Canadian dollar. The only thing reframed first to get into any euro trades because we just don't have enough in a good position to get into it. So if you're just looking at the pure price action chart, of course, this is a good candlestick. But again, it's not a good position. You are actually at the low point. Of course, you can say that, hey, you might keep going. If you draw a line here, which again you broke down a support and now you touch the resistance. Now this looks like it's going to keep going. So yes, it does look very attractive, but I just don't have enough faith toward British pound. But and on top of that, we have a negative CPI data today. So, but we'll see. We'll see what happens. I'm gonna take a look at further, but we'll keep going with our pound trade right now. So cable pound Swiss, we have an update for pound Swiss. Cable is again pound Aussie, pound CAD, pound New Zealand. If you're just looking at the chart, British pound is actually still quite strong at this point. And that's why I'm tempting to short euro pound, Swiss franc yen at this point. Dollar Swiss, dollar CAD. Again, it's really not a short day for dollar CAD, but it is a down day for dollar CAD because we have a large update for Canadian dollar. Dollar yen continue to go up, and we actually hit a new high. Continue to need to hit new high today. And let me just take a look at the hourly chart of dollar yen. Yeah, okay. Yep, so continuation of new high, keep going up for dollar yen. Okay, and Aussie dollar, let's see, Australian Swiss franc, Aussie dollar. It's actually not a bad signal today, to be honest with you. But again, it's not a currency pair I want to, because I don't want to short euro dollar. So I'm really looking for something else. And as you can see, Aussie can actually drop again. And Aussie New Zealand is the one we currently, of course, Aussie yen is another update. So really, everything is just working very closely to the sentiment and the personality of the trade. Cash Swift, yesterday I was saying that, it's very tempting to go long on Cash Swiss, but again, like I said, I have no faith to work. All right, so CAD Yang, a huge update for Canadian dollar, and New Zealand Swiss. Again, nothing really on my radar. New Zealand dollar, New Zealand dollar actually, again, we have a sort of a bearish signal here, but just mind you, we actually have very strong support. And New Zealand dollar is, of course, not having a strong sentiment toward US dollar, but it's not really not a bad currency at this point. New Zealand CAD and New Zealand yen. So basically, again, I don't really have much in terms of daily trade, but you know, if lots of you want to trade a risk event, you can certainly do it. Today I keep looking at this dollar yen trade. It's because I was very tempting to enter today at the New York session at this very good solid candlestick. The reason I didn't do it is just because I just don't have enough risk and reward ratio to keep running. You know, this is a top daily PV point, and for me, that's really how I trade intraday trade. And of course, let's hope if we have anything to give us some signal today. Otherwise, you know, that's today. I actually trade euro dollar. So I trade euro dollar at the release of US data. So 8:30, we have a good retail sale data. And let's see if I can get it more clear. So that's a retail sale data we got in here. Of course, you can see we actually got at the low, and that's really, you know, when you're trading a news event, of course sometimes you can wait for a couple minutes to get in, but I generally like to jump in and give myself a wider stop loss. So I got in at 1.07. Gee, I don't even remember where I get in. Let me take a look. I got in at 1.0738. So I got in at 38, actually very, very low. I actually sell at low again. It went against me, and then I just basically holding the trade, keep holding it all the way until, you know, near the Wall Street opening. And I just realized, you know, it's been 45 minutes. This thing, I take a look at the daily PV point. You know, what you can do is, this is what I generally do. I go to daily chart, and I take a look at the average true range. It's about 80 pips, right, for euro dollar. And I go back to my, you know, this is the day's range, right? So I just take a look at the highest high, it's 1.0815 minus 80 pips, it's 1.0736. That means I'm actually at the bottom, already at the bottom of the daily range. Now, that doesn't mean that it will not keep going lower. Actually, in the contrary, it actually keep lower, of course, went lower up as low as 1.0713. So it's not a science thing. It just gives you a sort of estimation, give you a better probability. So, of course, I just decided to get out before the Wall Street opened because the London session almost ended, and I just don't want to have any loss for the day. So I got out, you know, make quick 10 pips, and that's about it for today. And the other thing I did is, of course, the cable trade, which I shorted at the release of the negative CPI at around 4:30. So it's around here, yeah. So this is the candle I short. Was very well, went down to give me 30 pips, but I didn't take it. I didn't take it because I was really knowing that the cable has already have some bearish sentiment. So I'm really hoping it to drop further, but it did not drop further. So unfortunately, stopped me out at break even. Now it went too low as 1.2380. Still not in my profit target, but you know, that's the thing when you trade intraday trade. You really don't know how strong the momentum is, but all you can do is really just protect yourself, and really you have to make decision on the spot to decide whether you want to hold it. Now, the other reason I got out, of course, is because the PPI data was actually positive surprise. So as mentioned right now, Britain is really in this in between right now. They can either they're really like, if I'm a central bank governor, I really don't know what to do. Because if I cut interest rate, I'm going to hurt my exchange rate further. I'm going to hurt the producer more. I'm going to basically hurt a lot of people. But if I don't do that, I cannot stimulate the economy. So what can I do? So basically that's really what happened. So that's really the two intraday trade I have for today. Now, in terms of what you can do tomorrow, if we have any intraday movement, let's take a look at it. If we have any risk events, so tomorrow, Wednesday, you have another pound trade. Now, generally speaking, the rule of thumb, I will not go into any daily trade if there's risk events coming up so close. The reason, like I say, I got into a cable and still very confident about it is because my confidence toward US dollar. So it's not because I have confidence toward British pound or I have bearish sentiment toward British pound. No, this purely because my confidence toward US dollar. So this, of course, is a tradable event. Again, we are only looking to short on negative surprise. We're looking to long on positive surprise. Now, if we have a positive surprise, depending on how the London session open, but if we still have a risk on sentiment, you can buy pound yen. You can buy British pound versus Japanese yen. If we have a negative surprise, then you can sell British pound against US dollar. But because you already have a US dollar in, maybe you can sell British pound against Australian dollar, or you can sell British pound against Canadian dollar because Canadian dollar has a good sentiment. So again, it really depends on how the London session open to give us provide us some momentum. But let me give you the number now. Okay, so the expectation is for average earning is 2.3%. So average earning is 2.3%. We are anything above 2.6% is a positive surprise. I repeat, anything above 2.6% is a positive surprise. Anything below 2.2% is a negative surprise. Anything below 2.2% is a negative surprise. Now, in terms of climate count change, in terms of this one, we're expecting 1.9K, so 1,900. And anything above 5.5K is a positive surprise. Anything above 5.5K is a positive surprise. Anything below negative 2.0K, anything below negative 2.0K is a negative surprise. So again, if it's a positive, you can buy pound yen. If it's negative, you can short pound Aussie, pound CAD, or pound dollar. But you have to see how the London session goes. At 8:30, you have manufacturer sales from Canada. Again, it's only tradable if you have a surprise. We are expecting 0.1%. It says minus 0.2. So on my router, it's 0.1%. But anyhow, we are expecting the positive surprise will be 0.7. So anything above 0.7 is a positive surprise. Anything below negative 0.5. Negative 0.5 is a negative surprise. Now, what you can do, again, depending on how the WTI market plays out, but generally speaking, you can buy Canadian dollar against any weak currency, providing this in the London session. And of course, you can short Canadian dollar against US dollar. Now, PPI data coming out from US, again, that's another tradable event. We are expecting 0.3%. The positive surprise will be 0.5%, and the negative surprise will be minus 0.4%. And that's pretty much it. So of course, this is our all intraday movement. If you don't have any daily movement, of course, you can always get into a US dollar trade at risk events and holding into a daily. If you already have a daily, you don't want to over leverage your trade. So just a rule of thumb to always consider your risk and be careful about it. Crude oil inventory, this is going to be important for your oil market, especially we now already have volatility from this OPEC meeting and the meetings coming up. So be careful for the crude oil inventory. And other than that, you have PPI data, retail sale from New Zealand, but it's all tentative, so we don't know when it's going to release. and generally most likely it's not gonna be released in New York session. So I'm prior to London session, I'm probably not going to trade it because I'm not going to trade anything after London session. Just my own schedule. Okay, so that's it for today. And again, just to recap, you have 2 free risk events you can trade. Other than that, right now we're still holding our Aussie Newsy trade. We have 1 cable trade in. And other than that, if you don't have any opportunity, then don't force it. It's fine if you don't have trade. If you are so action oriented, then don't do day trade. Go to shorter time frame, do a session trade to get that out of your system. But if you want to do day trade, weekly trade, you gotta have some patience. Okay, so if you have any questions, feel free to comment below. Otherwise, I'll be back tomorrow to give you another daily analysis. Thank you very much. Bye bye.